The Ethereum Shanghai hard fork upgrade is coming towards the end of this month. We are running out of time before this enormous change happens to the Ethereum ecosystem. Many people are talking about the potential for this causing a huge sell-off in Ethereum, as over $28 billion worth of Ethereum will be released back to holders who staked 32 Ether each just a couple of years ago. But I'm going to talk about all the reasons that this Ethereum upgrade is going to cause a massive explosion in the Ethereum price, and why really you should probably have some exposure to Ethereum if you're interested in investing in crypto, obviously not financial advice. So guys, do me a favor, hit that like button, hit subscribe, and let's get into today's video on Ethereum. Now, in order to help us explain what this upgrade is, let's jump across to Cointelegraph before later on we'll jump across and look at Ethereum charts and some price predictions as well, which I know is what most of you are here for. So, Ethereum Shanghai upgrade. By the way, each upgrade is named after a different city around the world. Shanghai, China, obviously has been chosen for this upgrade, and that's what we got in this image here. Very cool. Now, there are 5 Ethereum improvement programs, or EIPs, that the Shanghai hard fork is going to be made up of. But the main one that everyone's focusing on is the 4895, which is basically the unlocking of that staked Ether, totaling $28 billion. That's a huge amount of money that's going to flood back to people who've been holding it. The main concern that people have is, are these people who've had this money locked up for the last couple of years going to start to sell it back onto the market, causing a massive sell-off in the Ethereum price, because $28 billion is a huge amount of Ethereum. The whole way that the Ethereum chain has been working previously from proof of work is now going to move to proof of stake. This was designed to make it more efficient, cutting emissions from the mining of Ethereum by about 99%. This meant that the governance of the chain moved away from a resource-intensive mechanism and became more environmentally, socially, and government-friendly. This is also important because many countries around the world state that they banned Bitcoin and Ethereum because they were non-environmentally friendly, China being one of them. So the ultimate goal of the Ethereum network to upgrade was basically because of all the problems that existed. Previously, there's really bad problems with Ethereum in that it was extremely slow and also extremely expensive. If you were trying to buy and sell NFTs like I was during the NFT boom early last year, you'll understand that sometimes you're paying up to 25, maybe even 50% of the cost of an NFT just on gas fees alone. This made it pretty much inefficient and completely almost useless at times. So the main aim of this was to speed it up massively and also to reduce those insane fees. And this is basically what every other blockchain has tried to do. It's tried to steal away the limelight from Ethereum. However, while Solana lacks security, Ethereum's always been pretty solid. So if it can nail these two problems down, it's going to become the ultimate blockchain, in my opinion. Now, while previously we've seen the Ethereum upgrades result in a very positive reaction from the market, and I'll discuss a little bit about that in just a moment, we're also seeing a lot of other positive news coming out about Ethereum. During a pretty tumultuous time for crypto in general, we've seen Ethereum performing very strongly. Ethereum deflation hits a record high 6 months after the merge, which happened back in the autumn of last year, and this is a very, very positive for Ethereum because Ethereum used to be an inflationary asset. It meant that there was always more Ethereum getting made all the time, but now we're starting to see Ethereum get removed. The whole world works on supply and demand. If there's more of something available and there's less people wanting it, then it's going to get cheaper, and if there's less of it available and more people want it, it's going to get more expensive. That's pretty much how crypto pricing works if you are unsure. By creating deflation and removing Ethereum from the network, it obviously means that there's going to be less availability, which is one of the key factors when we think about supply and demand. So what we've seen very recently from Ethereum is very interesting indeed. We are starting to move more aggressively than Bitcoin. Bitcoin having a very similar looking move to Ethereum, but Ethereum keeping up quite nicely. Whereas recently, smaller cap altcoins like Gala, HBAR, etc. have all sort of struggled to keep up with the pace we've seen Bitcoin moving towards the upside. That's because it's mainly institutional money that is driving these moves towards the upside. Institutions don't really touch smaller cap altcoins, they're more diving into the Ethereums and Bitcoins of this world. So what we can anticipate happening from Ethereum, we've got the double-edged sword. Many Ethereum are going to get released back to their holders. But because you could only buy 32 Ethereum at the time and stake 32 Ethereum, that's quite a large amount of money, right? Currently it's valued around $52,000, I believe. At the time, it was perhaps a little bit more than that, which means that the individuals who had been staking it mostly were kind of higher net worth individuals rather than lower net worth who might be desperate to get their hands on the cash to be able to sell it off because they need that money. Now, I'm not saying that everyone who's got that Ethereum staked is just going to hold on to it. There will potentially be a little bit of a sell-off. But if they're able to sell it off, it also means that the upgrade was successful. And if the upgrade is successful, then you're going to see a whole load more institutional money pumping into the market. So those people who initially invested their Ethereum and staked their Ethereum are more likely to hold on to it. So it's kind of a very interesting dilemma here of what we can expect to happen. Personally, if I had staked my Ethereum, I might be looking to offload a little bit of it, my 5% or whatever I'd earned on that 32 Ethereum. But mostly I would be aiming to hold for a much higher level of Ethereum, where we could be pushing towards $4,000, $5,000, maybe even more in the future. And I think this is going to send Ethereum way higher. And what we can see on the charts right now, very interesting indeed. Now, we have an order block down here. Now, I've left this order block down here for Ethereum because we can see that this does go in line with the 200-day moving average. And what I want you to notice is what happened here. This is a very good indicator as well, by the way, for what happens in other crypto markets. We can see that we basically have a pattern, like a double top, and many people would have been like, yep, this is a double top. It's going to dump way lower, and we're going to get it down here. But notice what happens when we dip below this low, we come a little bit lower and then we come back up. Now, what this is basically doing, and this is what institutions do quite regularly, is this down here represents liquidity, okay? Liquidity is basically, it means that down here, they can get a lot of Ethereum at a cheap price. So what they do is they take a hit and they sell quite a large amount off in order to drive the price down into here. They can then buy up cheaper. Also, everyone who's gone long here, all the retailers who are going long up here, get liquidated under this low because it's where their stop loss sits. When it hits their stop loss, that gets triggered and pushes it lower, enabling the people who originally sold it off to come back in and buy lower. Now, what this tells us, as soon as this turns around and we get this lovely morning star pattern, which is this big candle, then the little cross in the middle, and then the next candle out of it, you can remember that for another day, is that we are going to get back in. And once we get back in from here, you know that we're going to be pushing higher. Now, we can see that we are finding resistance in this area, and that's because the DXY, or the US dollar index, is showing a little bit of strength today. But I do see the DXY failing in the shorter term and falling lower. That's going to drive Bitcoin, Ethereum higher than we've seen before. And I think realistically that we are now coming through these highs. Now, the next high level you can see that we've run into is here, but ultimately that's a fairly insignificant one. I think the next significant high that we've got to pay attention to is up here. Just going to make it red so that we know not to buy into a zone like that when we arrive into it, but we would need to wait and to see what happens. Now, why is this a zone significant for me? Well, two things. First of all, or three things, I guess. One, two things. And then the third one being that this sits at $2,000. $2,000 is a significant number for Ethereum. And you're like, well, why is it so significant? Because everyone sits there and says, I want to sell Ethereum when it hits $2,000. If you're buying in down here at like $1,000, it gets to $2,000, you've doubled your money. Happy days. Yes, Ethereum will go higher later in the year, in my opinion, but I am saying people will start to sell off at $2,000 for sure. So we could see a bit of a bounce here. Whether we come all the way back down, retest these levels, maybe we come even lower, who knows? But in the shorter term, I see Ethereum getting up towards this $2,000 level. And depending on what happens with this hard fork upgrade, I'm assuming it's going to be successful. But don't assume things in crypto is a bit dangerous. I do think that we are going to bounce. What we're really looking for Ethereum is to bounce and turn $2,000 into support and continue higher. Sorry about my messy charts and all the lines I've drawn here, but you know, hopefully it makes sense. But if you want to trade Ethereum, or you want to trade Bitcoin, or you just want to follow someone else's trades, well, you can head over to Fairdesk because the fees are extremely low. You'll also get a bonus upon deposit here, which is a very healthy. And because the fees are super low, once you get further into the bull market and you are making a lot of daily trades on spot and things like that, believe me, it happens. You get carried away. Even if you think you're a casual investor, I'm sure you're going to get very excited by this bull market, especially as you're already in the game right now. They also offer copy trading where you can copy experienced traders trading Bitcoin and Ethereum every day. This is done with just a few clicks of the button and is an automatic process. Therefore, you don't have to waste your time and energy trading. But obviously, there's still risk involved, guys, so don't use money that you can't afford to lose because there's obviously downside potential as well as upside. But bearing in mind, we are now, in my opinion, in a bull market. Obviously not financial advice, could go anywhere, but I am getting the feeling right now that we are starting to fake everyone out to the downside with all of this negative hype and news and stuff. Collapse of the banking system happening in America. Who knows exactly what's going to happen, but I think crypto is here to stay and we're going to see some big pushes coming. Could be wrong though, so do your own research. Also, we're talking about this on a daily basis in my Telegram group, link down below in the description. So if you're not already in it, you should be getting into that right now, guys. Do me a favor, hit that like button, hit subscribe. See you in the next one. Bye-bye.